Here on India Tonight, we begin with the action taken by the Bank of England to fight inflation. They voted to raise rates by 50 bips, by 50 basis points. The central bank having opted for the biggest rate hike that the UK has seen in the last 27 years. And raising the alarm, the bank has predicted that the British economy is going to slide into recession from the fourth quarter of this year. The central bank expects that recession to be a lasting one, a long one. They are looking at it over 5 quarters. So the bank has also cut GDP forecasts for 2022, for 2023, as well as 2024. Let's listen in to what the Bank of England's Governor, Andrew Bailey, had to say on what is pushing the UK into a recession.
The rise in energy prices has exacerbated the fall in real incomes and so led to another significant deterioration in the outlook for activity in the UK and in the rest of Europe. GDP growth in the UK has slowed and the economy is now forecast to enter recession later this year.
Let's get perspective on the Bank of England's action and what it really says about global recessionary concerns. Peter Cardillo is joining us. He's Chief Market Economist at Spartan Capital Securities. Peter, great to have you with us tonight. The Bank of England has announced the single largest step in more than a quarter of a century. It has followed the Federal Reserve in giving priority to the fight against inflation over the risk of hurting growth. And the Bank of England is rather convinced that the UK is slipping into recession, though the US, of course, seems to be in a bit of a denial at this time. The UK central bank now had begun tightening that monetary policy back in December. The Fed has waited until March. So what's the difference that you find in growth concerns in the US and UK? I'm just wondering if it is essentially about concerns on gas that comes to the UK from Russia. Is the concern largely around an energy crisis, or is it more than that?
I think it's twofold. One, I think, the Bank of England is being more honest about the situation that perhaps the central bank here in the States is. They still talk about a soft landing, and they talk about higher interest rates here in the States. But there is somewhat denial that perhaps we're headed for a hard landing. And, technically speaking, we've had 2 negative quarters here in the States, suggesting that we're in a recession. And I do admit that it's some sort of a peculiar recession because we still have some real stammer and we continue to get good economic numbers in some cases. Now, going back to England, to Great Britain, obviously the Bank of England, is saying quite clearly, look, we got an inflation problem here, over 13%, not quite as high here in the States as in England, and that they are going to do everything in their power to take inflation back down, and it's going to take some time. And they're saying, look, we're headed for a recession. And that's basically, the real nitty-gritty of the central bank, of England's central bank, to fight inflation. The only way they're going to do it is by causing pain for its citizens, and obviously.
But Peter, now with commodity prices easing up, oil is trading around $100 to the barrel. Do you see inflation levels dipping around the world? And if so, do you think central banks around the world are going to pursue the cause of inflation with aggressive rate hikes, or do you see them easing up a tad?
I see the global economy headed for a recession. There's no question that oil prices are coming down. That's going to help bring down transitory inflation. But I think there's a big problem in Europe. And of course, England is facing that. And that's the gas situation. And that's coming from the Ukraine war. So that could be even more painful for Europe and England as opposed to the United States. They're at the mercy of Russia.
Now, if the Bank of England, as it's saying, has indicated so clearly, and you pointed that out as well, the UK economy is going to enter its longest recession since the financial crisis. How much do you see this, Peter, hurt the growth prospects of emerging markets like India, where we've been speaking about the trade deficit? It has been greatly widening in recent times. It has grown.
Well, there's no question. Look, if we're headed for a global recession, the world is going into a recession. But there is the possibility that India and other emerging markets might handle it a little bit better than the situation in the leading economic countries of the world. So economies of the world. So it's a toss up. But let's be clear about this, that if we head into a global recession, everyone is going to suffer.
Yield on the UK's benchmark 10-year bond has fallen to 1.8% from 1.9%. This happened today. So my question is now, Peter, how are global investments likely to shape up with global recessionary concerns crystallizing? Where will money be parked now? And if it's parked in the US dollar, then what are the projections that you're working with on the dollar index?
Yeah, well, to be quite clear, let's understand each other that I think the drop in interest rates in India is perhaps going to attract some investors, because that means that the fears of a steep recession probably has been eliminated. As far as the dollar index concerned, I think the dollar has still room to move on the upside. And if you look at today's international trade deficit in terms of goods and services, for the first time, it actually slipped under 80 billion. That's a good sign, and that's a positive for the US dollar. And I also think, just from an economic perspective, that the dollar, that the United States is probably in better position to handle a recession as opposed to the rest of the world.
Well, as far as the US is concerned, there seems to be a bit of a denial over there about a possible recession, and we've heard Biden speak about it. So has the Fed chair. We'll have to see exactly how that goes, Peter. But for the moment, I'm afraid we'll have to leave it there because of the paucity of time, and we'll connect with you again to get more perspective on this. Global recessionary concerns are all too real, and the Bank of England's action and what they're saying about the recession in Britain really tells the story. Thanks very much for joining us tonight.